I'm Nicholas Penrake, and you're listening to A Trader's Life, the podcast where I get to talk to successful traders about their approach to trading, how they started out and went from broke or breaking even to pulling in thousands of dollars a week. Trading is a tough game. They say only around 5% of those who try actually make a profit. Join me for A Trader's Life to glean some valuable insights from the market wizards I get to talk to. Early in December 2020, I got together with Kevin King, a trader based in the UK. Kevin started out life as an apprentice at Jaguar, took a break to go travelling, then came home to set up a property development business with his dad. While waiting for his first sale, he took a crack at trading. What follows might be described as his thoughts on that journey and where he hopes to get to next. Hey Kevin, how's it going?
Yeah, really good, thank you. How about you?
Yeah, all good, thanks. Yeah, where are you?
I'm in London, so South London. We're actually in Ascot, near just near the racecourse, really, and where they do the Royal Ascot and that. So I just live around the corner from there.
Okay, yeah. So you're a trader, and we got in touch through another trader. What kind of trading do you do?
So I mainly do futures trading and options trading at the moment. I've done Forex. Briefly just touched on my Forex within the last sort of probably 3 or 4 months, learning that side of it, which, you know, when I first started out, I had a mentor, and he said, you know, in sort of levels of, I suppose, how hard something is to learn, normally Forex is sort of the easier one to get your head around, then you do your futures and then you do your options. So I sort of went into it with the futures, and then I've gone on to options, and now I'm sort of going back to the Forex. So it's not been too difficult to learn because you've already got quite a lot of the fundamentals in you before you go to the Forex. But it's just the little tweaks on that. So mainly futures and Forex. Futures and options, and then the Forex is just coming along behind, really.
Yeah. And so when did you get into trading?
So I got into it 2 years ago. So November 2018 was when I first went to OTA, the academy, and I just obviously went to the they did like a half-day workshop. That was actually in October. Then I did like a 3-day workshop in the November, and then I did my first, what they call like a core strategy course, in the January. So so it's just around about 2 years as of now, really.
Yeah, and would you recommend that course? Did you get a lot out of it?
Yeah, I'd say, you know, OTA as a whole, they've had a lot of change recently with the franchise in London has had a lot of authorization, so it's not, you can't actually go to the academy anymore, whereas before now you could, which was great because, you know, I'm quite I suppose a people person. I like to go and see people, you know, in the flesh, whereas now you can't go there because they've closed it up. But temporarily, they say, but whether it will come back as it did, it's unsure. But the online stuff, you know, I've obviously through lockdown, we had lockdown obviously through from March till April, March till July. Everything's online, so, you know, it was a perfect opportunity to. This is where I learnt my options. Options is quite hard to learn, and it's sort of a bit like a foreign language. So I did the options class in June of 2019, and it just went over my head, just went gone. And then everyone who was doing it for the second time said, you know, you really need to do it 2 or 3 times before it starts to sink in. Then obviously we had all the problems with the academy, and now with COVID shutting everything down. So I just used the opportunity to study, and I've just really sort of, it's a really strange, you get to a point that it sort of turns, and all of a sudden it really starts to make sense. I'd say I did through March, say March, April, May, June, July, I'd say 4 months, I did more or less 7 hours a day, 5 days a week for those 4 months to really, really sink it in, and really, you know, it's like with my futures, when I started my futures, I started in the January, I did my core, and then in the February, I did my futures. And then I just did February, March, April, May, June, before I did my options class, exactly the same. I set it out as a business. You know, you go to work, you go in your office at 8 in the morning, you come out at 4, and you have a half. I'm very regimental, I suppose, with that. You know, I'm self-employed is my background.
Yeah.
So I've had to be motivated anyway to do, you know, to go to, you know, because you've got to go to your job.
Yeah.
I work a lot better if I've got a plan, and you just follow that plan, and hoping that at the end you're going to get to your sort of your end goals.
Yeah, sure. Yeah. And let's wind back a bit prior to trading and, you know, your earlier life. What job were you doing before that?
So when I was younger, I started as an apprentice at Jaguar, working on cars as an apprentice technician.
Okay.
And then I worked my way through that for 10 years. So I started around 16, 17. About 26, there's a lot of stages you go through. So you go from, you know, apprentice to junior technician to senior to master. So there's quite a lot of progression.
Yeah.
But I got to that master stage at about 24. And I was sort of where now? You know, where's the next, you know, sort of drive? And that's where I thought, I'm going to just take a year out. I went traveling, you know, saw the world, came back, and then my parents and his brothers have all been self-employed. And I think sometimes that sort of was always in the back of my mind to work for myself anyway.
Yeah.
So then I came back, and then I spoke to my parents, and my dad's built 2 houses himself, managed them, and, you know, done a lot of stuff himself. So I've always been in from a young age. You know, there's videos of me doing wheelbarrows in the garden and knocking walls down and hands-on stuff. So we got our heads together and we started up a property development business. So I started that in 2009. And yeah, I did that I'm still doing it now, but I did it for 10 years. It's this 10th year now, or 11 years.
Yeah.
So it got to the point of that was, you know, working really well. But what you find if you're developing properties, unless you've got enough money to do 2 or, you know, a couple at a time, if you're just doing one, you buy it, so that's great. You know, you work for 6 months, a year, then you've got that transition period between when you sell and then when you buy your next one, and which you learn as you go along. You're only ever as good as you buy, because the minute you buy that house, that's your bottom figure, and then everything else is obviously a minus until you sell. So it can be, you know, sometimes it can be 3-6 months between houses of, you know, not having actual any work, because you're waiting for the house to sell so you can buy your next one. So I found that I'd sell a house and then I'd be waiting to buy the next one, and the money would be in the bank. So I was like, well, maybe I could utilise this money in the meantime.
Yeah.
So that's where I come across the trading. I'd had a few different stocks, just UK stocks through the years that I'd, you know, made a little bit of money on here and there, and I'd sort of had a little interest in it, but not on the thing of thinking, right, I'm going to actually make this as a career as well.
Yeah.
So then I thought, right, if I can learn this other skill, then that means that when I'm not doing a property, then I can, rather than the money sitting in the bank just getting 0%,
Yeah, exactly.
I can maybe use some of that money to then, you know, make some money and learn at the same time. And that was sort of my path into the trading world, I guess.
Yeah. Did you start off teaching yourself and find that was a bit tricky, you're losing, and then go and study, or did you straight away start off with studying?
I went straight study. Yeah.
Okay.
I read a few, you know, quite a lot of stuff online, and there was a couple of different academies that, you know, based around here. And I just I guess I stumbled across the OTA Academy, just because the only reason really was I'd already signed up not signed up, but they'd sent me the paperwork. It was ready to sort of go with one in London. It was like a 2-week, you know, learn how to trade and away you go type course. And then this OTA came along. They were just doing this half-day workshop literally in Reading, just up the road. So I was like, oh, that's easy to get to. Sort of almost a convenience thing was the reason that I went to them rather than going into London. And then when they give you the half-day class, and then they give you another 3 days of training, or not training, say the world of, all the different things you can do within trading. It's a real eye opener, to hold on a minute. You see different people on, the internet or on the news. Oh, this forex trader's just made $500,000 on this one, and all this sitting on a Lamborghini. It's just
it's a load of rubbish mostly.
Oh my goodness, it is like it's like any business. If you want to last, I guess you need to study. You need to start. When I speak to, there's a couple of guys I speak to regularly, and you sort of think to yourself, well, we're in the, I've done it for 2 years, but I've only been live, actual live. So the first year, almost, nearly a year, I did sim trading completely before I went live. So I've only been live. It was September last year, 19. So about 13, 14 months. You are only very early. You're almost just coming out of preschool into your primary school of your learning. And you listen to the guys that I listen to sort of regularly that have done 20, 30 years in the game, as it was, and you've got a long way to go, and sometimes it's very hard because you're dealing with actual money. I mean, between simulator, I'd have kept it, which we're taught that you use the same amount of sim money as you will when you start your trading. You want to do 30, 40, 50, because what you start to find as you progress along is consistency is obviously what everyone's looking for. So you can get consistent, regular results. But it's fine saying that, but try doing it. And especially when it's real money and the emotion comes in, it's just a total different, And as I say, I was pretty consistent, I'd say, with my sim trading, and I was having, month on month, say 5-10% increase on the amount that I would have been earning. So I was like, okay, I'm ready, and then you go live, and all of a sudden you lose about 5 trades, and what's happening?
Yeah, exactly. Yeah. So how much did you start off with when you went live?
I started with $25,000, so about £20,000.
Yeah.
And within that first year, that fluctuated. When I had a good instructor for my futures, and I'd done 2 classes with him live, and he said, if you can trade live for a year and you more or less have the same amount of money as what you started with, you'll probably make it or you'll put in a good years of groundwork, as it was. Because in that first year, if you've made a bucket load, it means you're probably gambling and risking too much. If you've lost a load, then you weren't ready to go live, and you're just chasing it. Your emotions have taken over.
Yeah, you're reacting.
Yeah. So he sort of installed it quite early that if you can which is a weird thing because you think, I'll just say it for a whole year and earn anything.
Yeah, I know, it's weird, isn't it? Yeah, but you have to reframe it, don't you, and say, well, no, I'm just at college for a year, albeit with real money that can make real profit. You've got to say, no, just relax. This is going to be a year of study.
Yeah. And 2 years in, and it's still massively studying, and you learn, and I think what happens is you learn without knowing you've learned, if that makes sense, especially with your emotions. You change the way it happened this week, and I trade on a Monday and a Wednesday. You can trade an SPX trade in the evening, and in the past I would have, because I was trading the Monday and the Wednesday, I would have traded almost whether the trade was there or not, because that's you trade on those dates.
Go back in. Yeah,
exactly. But this week and even last week, and obviously with the election going on and all the turmoil that's been going on anyway, sometimes it pays you to sit out, and they say cash is a position, and it is, because you can put your money into something, put yourself on the back foot, full well knowing in the back of your mind you're thinking, there's not really a trade here, but I've got to do it because I do on Monday and a Wednesday. That then it becomes second nature that I will quite happily sit here for a couple of hours, not trade, and that'll be it. And then I'll see what happens on the next open,
Yeah.
But again, you can't, you in a way, you can't learn that. You just have to go through the pain.
Yeah, exactly.
However many times it takes for you to actually go, hold on a minute, that didn't work. Hold on a minute. And then you think, oh, why didn't that work? No trade was really there. Why didn't that work? I was taking too much risk. Why didn't I work? Oh, the market had moved, well beyond the expected move before I was even going to do the trade. All the telltale signs are there for you to go, actually, it's okay just to sit this one out. But and as I say, without actually knowing, you actually change the way you think.
No, exactly. Talking about futures, what kinds of futures do you trade generally? What are you looking at?
So I used to trade. It's changed actually, because I've over the last year I've changed the way that I trade it, because I've work's picked up on my other work, like construction side work. My time has been harder to get in front of the screen all day. So whereas March, when we was in lockdown right through till just this October, I was in front of the screen 7 days a week, well, 7 hours a day for 5 days a week. That then lends itself to doing some day trading. So there's different commodities that you can day trade rather than ones that you look at maybe longer. So I've scaled back the amount. I used to look at all the gold, all the ES, the Nasdaq, the Dow, all those, the equity markets. I do all of the currencies, even some of like cattle and corn and wheat. And so I'd go, I'd have maybe 30 different ones that I'd be looking at regularly. But now I've scaled it back to just the currencies, so futures currency markets, oil, nat gas, and gold sometimes, but gold can be a bit naughty sometimes. So
yeah, for sure. Yeah. I mean, it was going to the moon, wasn't it, during the summer, and then collapsed completely.
Yeah. Well, I had a really nice trade on it just over Christmas last year on gold.
Okay.
And but it was, in hindsight, looking back now, would I trade like that? Probably not, because I was still, again, this has changed me in the year of holding things overnight, and holding over weekends and stuff like that. I mean, I was lucky that at the time I got into gold, I got in a long position on like the 23rd of December. I exited on the 6th of December, 6th of Jan, sorry. So about 2 weeks, made like a 55 to 1. But 3 or 4 of the days over there, it was closed. So anything, it could have, it was gapping up day after, weekend after, the Christmas period, then a weekend, and it was just gapping up and up. And I was like, happy days. It could have quite easily have gapped down.
No, exactly. Yeah.
And
gold is very, very volatile. I mean, it moves so fast against you, doesn't it? If it does.
And the gaps, why put, it's great to have those home runs, I guess. But why put yourself in an unnecessary risk when you don't have to?
Yeah.
Again, that's what comes of learning. As I say, I've been lucky. I've never, touch wood, I've never got caught on the wrong side of a gap. But last year oil gapped $8 over a weekend. If you have one contract, that's $8,000 gone.
Yeah.
It comes. That can be tough. So if you put yourself in those situations, why would you do it? If it's just madness, really. Especially as you got to be thinking you're running a business here. You're not just mucking about on the computer for a couple of hours a day. If you want to go in for the long term, you've got to install those rules that will then stay with you through your career. My actual amount of trades that I do is probably gone from maybe 30 a month, probably down to maybe 5 a month. But those five that I do, I'm waiting. You just patiently wait, and rather than jumping into things thinking, oh yeah, that might be good, or there's none of that. That's sort of gone out of my trading, and for the right reasons. So you then you're just always being very patient and disciplined, not to, you need to set your rules out is another big thing. You need to, not a hard and fast set of rules, but you need to, and this was hard, I think, when I first started with my training, is write a trade plan. Well, how do you even go about that? So you just, they give you some guidance, and you go through the questions of your why and why you want to trade, and what's your goals and all that sort of stuff. And it's, and I did the first one in 2018, and then I've done one last year, and then I'll do one at the end of this year. And you can actually see what you've written, and then you review it, and then you write your next one, and you think, oh wow, look how much I've changed without even knowing it.
Yeah, in terms of goals and or mindset.
Mindset is a big one that changes as you go. I mean, your goals are, I think my goals are pretty much still similar, which is I'd like to make my trading be able to pay for this, come up to the same level of, I guess, income as what I'm earning through my properties. So then I've got, almost two inputs of income, with the goal of hopefully in the future me be able to just manage my properties rather than actually do the work, and then I can do my trades. So you're diversifying yourself, and I think with goals, it's good to have sort of almost two sets of goals: one realistic ones, and one those ones that are sort of the further out ones that you're always going to be pushing for. Because if you go for the big realistic, the unrealistic ones to start with, you'll just end up defeated all the time. And the worst thing with trading is to feel deflated and then try and, if you set yourself, right, I'm going to earn $1,000 a week. Okay, right. And in the first 2 days, you're down $500. You go into that Wednesday, Thursday, and you're like, I've got to get this back, and now I've got to get 1,500.
Once you catch the sort of whiff of desperation of your own, that is, you usually end up making some silly mistakes, don't you?
That is the worst place to be when your mind is not in the right place. You want to try and get that money back because you feel like the market's taking it off you. I've been there. We've all been. I think traders, anyone who says they haven't been there is lying.
Yeah.
And I've been there many times, I guess. But you just get better at controlling that, and almost just almost walking away and just going, right.
That never mind sort of thing. Yeah. You have to be like that to preserve the person you want to be tomorrow.
Exactly.
Because if otherwise you just go back at it with this sort of revenge attitude and screw it all up.
And then the more you do that, the more you lose. The worse.
It's a vicious circle,
it goes.
Talking about timeframes, that you trade less, but therefore sort of over longer periods of time. So you're looking at days, weeks, and months. I imagine this is the same for you. When I've looked at those timeframes, I'm having to work with a bigger or sort of longer stop loss or bigger stop loss, whatever the word is, because you've obviously you've got more retracement to deal with, haven't you? On a daily chart, you may well have. I mean, you might be lucky; you might just go shooting up or shooting down, whichever you've gone for. But generally speaking, there's a zigzag, and of course, the retracement, can stop you out very quickly.
Yeah. The way that I've been taught is you use a very small stop. So you'd use 10 tick stop. But what you're taking your trades on is candle reversals. And say trend line breaks, support and resistance levels. So what you're looking at is these key points within the pivots, all that, and you're looking at these key levels. If price does what you think it's going to do, Bollinger Bands is another one that I use quite regularly. If it meets your criteria, which is another whole thing, because when I got taught this way of trading on the higher time frames, I went out. I was like, right, this is what you got to do. If it's if it's oversold and on the RSI and the indicators telling you it's oversold, I need to be buying it if it's inside the Bollinger Band, let's go sort of thing. So you're always fighting that trend, which is counter trend trades are
tricky.
Tricky, yeah.
Yeah.
So I went out and I was just like loser after loser after. I was thinking, Then you start, because I did a 3-day class on this way of trading. I was like, okay, this is pretty, because I've already done my futures for, by that time, 9-10 months of live trading. This seems pretty cool. Okay, let's do it. So you look at these signs and it's got a shooting star or island top or reversal, bang, let's go. And then you just think, because you're thinking, oh well, I'm only risking 10 ticks, so maybe $100, or on the pound it would only be like $62. That's your risk, and you do that. You go 3 times, so you try for 3 goes. So if the first go doesn't work and it comes back and stops you out, then if it then hit that price level again, you go in again. 3 goes, almost 3 strikes, and you're out type of way trading. So I was like,
okay, so you're keeping the stop loss really, really tight, but then
really
if you get
tight,
stopped out, then you go back in again.
That's it,
if you see it.
So that's the way that I've been taught that way. But straight away, I was like, well, this doesn't work, because it's like,
because you keep getting stopped out.
And because it's only $60, you're thinking, oh, it's only $60. But you do that 3 times that day, and then you do it 3 times the next day. Then you do it 3 times the next day. If you're doing it on gold or something,
it adds up.
By the Wednesday, you're $900 down.
Yeah. So much for that.
Like, hold on a minute. Yeah. This isn't working. Then you go back and you start to go into the, you need to know, there's a lot of things that have to line up. It's not just a case of going, that's just about to break yesterday's high, let's go long. It's all about your location, the position, how you're trending, what stage of that trend you're in, and then you start to think, okay, well, I need to learn a lot more before I throw all my money away, basically, because all the little losses all add up, and then before you know it,
of course.
And now, so what I did is this way of trading worked for me because I wanted to learn my options. So, as I say, it doesn't take very long. It takes maybe, you could do an hour a day to just look at all your charts. If I'm only doing, say, 7 currency charts, oil and gas, then I've not got, I've got maybe 10 charts to look through. Obviously, the weekly and the monthly levels are only changing, the weekly once a week and the monthly every month. So once you've set them, they're there for the week or the month. Then you just, each day you can just review and go, okay, well, what's happened? Where are we? Are we getting near any key levels? Are we looking for any reversals? Is it showing me any signs? But you can do that very quickly on a weekly and daily chart. So that worked well with my training of my options, which freed up the time, because it is, especially when you start, it's very easy, I found, to overload yourself with, right, as I say, I like a plan. So I had a Word document with 9 till 10. Learn about Bollinger Bands. 10 to 11. Let's learn about fib extensions. And you bang, bang, bang. Then watch this instructor. Then watch that instructor. And before you know it, the day's gone, and you think, what have I learned, and what can I bring to tomorrow that I didn't know today? Or have I just tried to learn so many different things? Because there is literally, especially when you start going to options as well, there is hundreds and hundreds of things that you can you try and learn.
It's information over
just even just oil, for example. If you want to trade oil and you really want to get deep inside of how it all works, you need to know about the times of the month when rollovers occur in. A couple of days before, they keep some of the oil inventory will stay out. They even keep the boats out at sea, and then they bring them in at different times to, so you've got to.
Yeah, you really have to follow the news on that one, don't you? I think.
Well, news reports, and just the understanding of the workings of it and the fundamentals of how seasonally things. I mean, this year's been a big mess, I think, seasonally. But last year, seasonally worked quite well, with different things with, gold and oil and the Aussie dollar and the Canadian dollar and how they're correlated and, all that sort of stuff. If you wanted to just trade one, say oil, you've got to spend hours and hours and hours getting deep inside as to why price will move in certain ways at certain times of the year, at certain days of the week, at certain just before or after rollover.
There's a real risk you could spread yourself too thin, isn't there? Because especially when it comes to commodities, I think it's a bit of a risk to trade commodities without knowing something about, whether it's corn, wheat, oil, whatever it might be. It is more, even if you're a technical trader, I think you still have to be aware of the major changes, because you can come really unstuck.
Well, you can, yeah, and I've had it, and I've been in positions. I can still remember, you always remember certain trades, and I was in a short position on oil, and I had like a 3-to-1 target, and it was there. It was done 3-to-1. I was at like happy days. Took my $300 for one contract, and then it just continued to go, and it went like $6,000-7,000 would have been trade, and quite quickly within a couple of days. And I spoke to an instructor, and I said, "Oh, I just don't understand why it didn't, hold those other levels that were there." Which I thought, you 3-to-1, you looked for the opposing zone, and he was like, "Oh well, it's to do with as I say, the rollover, the end of their fiscal year, all that comes into play." And I just happened to be around all that at once, and they wanted to deplete a lot of their stock before they go into their next year. That's so that's why it fell so much. I was like, now I know. obviously too late, but as we just we touched upon, you need to know. It's hard to put relations to other stuff, but if you wanted to fit a kitchen, you wouldn't put a bath in there. Right? You wouldn't, because that doesn't go in a kitchen. A bath goes in the bathroom.
Yeah.
But you almost think, or a lot of people that don't know a lot about trading will think, well, if you can trade that, you trade anything. But you don't. You need to know why the things work, how they work, ins and outs of everything, and that then will make you that much better of a trader. But as I say, for me, with being able to go and put my sort of, say, 80% of my time into options, because I really, really wanted to learn it, that makes sense, that style of trading, because I don't need the hours of almost picking the charts apart.
Being stuck in front of the screen, yeah. Options, that's stocks, right? Rather than, say, currency options.
You can do options on futures, but I haven't done that yet.
Yeah. How do you go about choosing the stocks you want to trade on in the options area?
So there's lots of different ways you can do them. Earnings is one. So each earnings season, every quarter, there's you have a set of rules, which is good. Again, with options, you get quite a lot of rules you need to meet criteria wise before you'd even think about trading it. And because there is so many, you get you can get scanners and filters for different things, and you just almost, you start with however many. Everyone's different, so it's not the right or wrong way. But when you get a good, say, mentor who's teaching you, and he says, right, well, I've done this, and this, that hasn't worked. I'm now doing this, and this, which does work. You can either do this, and this, which doesn't, and you can learn, you learn your own way, or he's sort of
take a shortcut.
Yeah, he's sort of saying, well, I've done this for however many years. If you want to do the hard graft yourself, you can, but sort of almost trust the guy who's teaching you to say, you got to try it yourself. It's your money at the end of the day, your risk. But I've gone through the 9 yards to say, right, well, these sort of, like an example is don't trade anything under 1 million contracts a day or shares a day that trades. Anything that doesn't trade over 1 million, I won't trade. It's just one of the criteria. Okay. It doesn't mean that you couldn't trade something that's under 1 million, but it just, if you go through the experience of, if it's not liquid enough, then you can't get out. You can always get into an options trade quite easily, but it's getting out. So if something isn't liquid enough, i.e. it's not got enough volume, or it doesn't have enough liquidity, or it doesn't, the spreads are too wide, you can have trouble getting out on a lesser price stock.
Yeah.
So if it's not traded over $1 million and it's under, say, if it's a low price stock, so say under $100 in price, you can struggle. I've heard stories, because I've not done it, because I've just thought, right, that's what I'm going to trade. That's how I'm going to trade it, because someone who with experience is saying they've struggled, and there's other people that I on Twitter with or whatever, and said, we struggled to get out because, and if you're stuck in a trade and you can't get out, that's not good news in my book.
Yeah, exactly. Do you tend to go for a call option or a put?
At the moment, I normally do vertical spreads. So I sell vertical spreads. So I'll be selling sell a call, and then I'll buy a put. Sell a call and buy a call higher, and then I'll sell a put and buy a put lower. That's
credit spreads. I think
credit spreads. They're called, vertical credit spread.
Yeah.
I'm looking at possibly a long option on Apple as a long-term sort of leap of a couple of years out, which I'm just waiting at the moment to see if I'm going to put just for a long. I'm bullish on Apple long term.
Yeah. So what is long term for you? Is that months
2
or
years.
even years?
It'll be a 2 years. So I'll go out. Might even be 2.5, maybe even 3 years if I can get the credit. Or if it meets the criteria, not the credit. So if I'm looking at Apple for 2022 or Jan 23, I could be long in that time, with the fact that it's at around $1.20 at the moment. So you look at it to maybe double within the next 2 to 3 years.
Yep. Okay. Why Apple and not Tesla, for example?
So Tesla, because when Elon Musk, when he tweets, he did it a couple of months ago or so.
Oh yeah, I remember.
Do you remember?
Yeah, the stock just. Yeah, I do, and I got burnt on that.
Did?
Yeah, yeah, not funny at all. Yeah, it's a bit like Trump, isn't it, with the tweets?
Yeah. So
what the hell?
If you go into something like that, Tesla, and he tweets something to say, "Oh, I think my stock is overpriced."
Yeah, it's going to come tumbling down. Yeah. Yeah, quite.
Could he been having a bad day or whatever, or he's been smoking something or whatever? I don't know what's going on. So
right, yeah.
With that, you can put yourself in again. It's almost an unnecessary risk type thing. On the face of it, I would like to probably go into Tesla for the long term, because electric cars are going to be getting bigger, better, and all the rest of it.
Yeah.
There's no doubt about it. They just said in the UK they're going to stop doing diesel and petrol by 2030. It's only 10 years away. So, on the face of it, yeah, good, let's go. But you're running the risk that he says something, tweets it out having a funny 5 minutes. He lost, I don't know, I think he lost 4.5 billion or something with that tweet. Well, that's not much of his 150 billion he's got. Yeah. And then you're down the pan, So
yeah.
So that's why Apple, and also they did like Tesla, they did a stock split recently. So there is a sort of a play you can do where historically within however many stock splits are done within the next 2 years, price can get back to that pre-stock price level, split price.
Yeah.
So that's another reason that but it's got to fit. You see, they split it in the end of August.
Yeah. How do you decide when to take profits and when to cut your losses on a trade?
On options trading or any trade?
Yeah, any trade really.
So I just have I always know my risk to start. So say, with the futures, I'm risking $100. That's so 10 ticks. So that's it. I'll never ever move my stops, because if you do that once and it works, then you'll always do it. That's another thing with trading is sometimes hard, I suppose.
You make exceptions for yourself.
Yeah, you can force yourself into full sense of security of, well, that worked that time, let me do that again, and then it'll rip your face off. So I always know, and the same with my options trading, I'll always know my max losses on my spread trades and my credit spread trades, and that's that. And when it gets to that, if I get to that loss, then I'll have my position set up, ready to come out. It's already, I'm already there. Which then again, you learn to get more comfortable. It's still not nice, but you get more comfortable with your loss, because what you find is if you preset everything and you stick to it, I can walk away happier with a $500 loss for the day than I would do if I maybe only lost 300, but I moved some of my rules.
Yeah.
Because you stick to, and that's what gives you the consistency. If you stick to something, and it obviously, if you're sticking to something and it's not working, then you need to change something, because if you've got a sample size of 30 trades and you consistently lose it, and then obviously then you need to, something's wrong, but then so then you can change something, and then if you go from losing 30 to losing 15, then you change something else, and slowly you get to 0 to plus to, but then you've inbuilt a system that is working, rather than just changing something on every other trade. But you do it. I mean, I've done it, been there. You just change something every time, and then it works, and it doesn't, and you think, oh, well, it worked like that. Why didn't it work this time? But over time, you just get those rules down, and there's some that are they're in there, and like I say, with the options, I'm very, very picky, because there's so many stocks, obviously you could trade, and so many different strategies. I've just at the moment said to myself, right, I'm just going to do credit spreads, and I'm just going to do them on earnings really at the moment, just because you could spread yourself. I've learned about butterflies, I've learned about iron condors, you learn about diagonals and verticals, and there's so many different strategies that you can use. You could overload yourself with them all and think, well, how do I even go about trading this?
Yeah. Do you focus on any particular types of stocks? Like, would it be tech or biotech or pharma or?
It depends on where the stock, because you can do like where the stocks are. So if there's, as you say, there's the tech and all the rest of them, but they normally are I sort of rate them as 1 to 7. I think there's 7 or 6. I've got 3 on each page, so 3, 6, 9, say 11. So I'll rate them from the sort of top sector, middle sector, and bottom sector. And then I'll just keep an eye on a weekly chart of that to see where they are within their sectors. And that can then sometimes have a bearing on where I might look at a trade. But as I say, because I'm still early days in my options trading, I'm sort of sticking to this just an earning strategy, which has very specific rules in it, and I don't really worry then about each sector. Does that make sense?
Yeah. And is this something you learned from your mentor?
Yeah. So he's taught that. I guess through the years, really. I've only been in his classes for the last 3 months, maybe 3 or 4 months. Just an instructor from OTA. So he's with the academy.
Was he a former institutional trader?
No, he wasn't actually. No, he didn't. He wasn't on the floor or nothing like that. He was just he was self-taught, I think, and then got good enough to then obviously teach. So yeah, he's done it that way. But there's so many out there, different people, and the way they trade, and the different way they trade, the different styles. Again, it's quite hard in a way, especially to start with, to find someone who I guess you gel with as well in a way, because there's people I've listened to who I've just thought I just can't. You're just not on my side.
Just not me.
You're just not. You're not you just don't connect with them, even though you're only looking at or listening to them, and you might type your comment in and they might answer your question. The only thing with obviously everything being online now, there's hundreds of people more, whereas before you used to be in a class, say with, I don't know, 50, 60 people. Now some of them have got like 900 people in there. So it's a lot harder to, I guess, have any sort of personal connection with the instructor, because there's just too much. They have to have support workers working there alongside trying to sort the questions out. So that's probably the only, or one of the drawbacks of everything going online now, is that, and obviously not being able to, when you go, or when I've been to live classes, you pick up those almost golden nuggets from the conversations you might have just completely off topic, which is another thing that you miss from not being able to do live classes. So hopefully, in the months, or maybe probably not months, probably years to come, they'll get an academy back in England, because they've still got them all over the world, but just not in England.
What sort of money are we talking for this course?
So they do it in stages. So the first core, they call it like a core strategy, which is just your basic charting and, right from how their supply and demand works and everything else, is around about £15,000, I think. And then from there,
bit like going to uni again.
Yeah. I mean, so you're probably looking at best part of £30,000, I guess, to do all of the courses that they offer. And then it's lifetime training. So I could do another course today or tomorrow if there was one running. So you can continue. So I did futures 3 times already. I've done options twice, and then I've done options 2. I've done Forex once. I'm going to do my stocks because I've got another property to do. I haven't managed to do that yet, but my goal is to get that early part of next year. I should free up some time in February, March, so I'll do the stocks. But what I liked about it is, you do obviously have to pay quite a considerable amount out, but it's there, almost forever. As long as obviously they don't go bust or something. You always got that, every day you can go on there and there'd be a live class, a live instructor going through markets. And once you just basically repeat, you just almost rinse and repeat to get it to sink in, because it is hard and it's not easy by any means. But if you continually do something enough times, in the end, more and more stuff sinks in. And then things from 2 years ago that I thought were really hard are now like second nature, like driving a car. When you start out, you got no clue, but now you just get in your car and you drive it. It's not even like a thing, is it? It's just doing it.
Yeah. When you hit a losing streak, how do you handle it? I mean, what do you do for downtime, or just to get rid of that kind of bad feeling and anger and all the rest of it?
Yeah, I mean, touch wood, because I keep quite a tight ship with regards to my losers, and I get now, as I say, I'm more annoyed if I break one of my rules, because and you can't help it. Sometimes you do, because you just if I'm trading in the evening, because the good thing about our time is that I can work anyway if I want to in the morning, because market doesn't open until 2:30, shuts at 9 p.m. UK time. So if I want to do a trade like in the evening, say 7 till 9, I can. But sometimes if I've had a busy day at work and whatever, and get the kids sorted, get into bed, and you come in here and you're not fully focused, then you can slip up and make a silly mistake, and then you just think, why did I even do that? What drove me to do that? And it's just your mind, and almost you need to just clear. I did some Dr. Woody Johnson he was with the academy, and I actually did for 2 days of like mindset training with him, and that was really insightful in a way. To mentally, trading is almost like 80% is the mental side, 20% is actually the trading, because you can just if you're not in the right frame of mind, and if you're annoyed before you even come in, if something else has annoyed you, like something's gone wrong in your day, and then you try and come in your office and start working, if you've got that in the back of your mind, it can affect, without you actually knowing, your subconscious is going to make you affect your training, and you'll do something wrong, break your rule, and lose money.
Yeah.
Yeah. So with the losing streaks, I mean, because I'm not trading that often, and because I've now put in place, which I feel is quite a strict, regimented plan, if I get a couple of losers in a row, but I'm following my plan, I know that my plan in the long term is working, so I won't sort of go, get really annoyed or change it straight away, because you once you spend the time and the effort and the days and the weeks and the months and the years putting all the hours in, you know that thing that you've installed is working, but it could be just if you stick to your plan, but the market decides to do something crazy, like move a lot of points in one go, you can't beat yourself up about that, because it wasn't your fault. You stuck to your game plan. It just, the market did it, and you're always going to have. There's no trade that doesn't have losers. You're always going to lose.
How about taking profit? Do you find you are able to let your trades run and take the profit at a good point? At that sort of point?
Yeah. So early on, it's very hard to let them run, because you're like, the minute you get to, you get a little bit of green on the screen, and you're like, right, quick move the stop. Don't want to lose money. Now I've got a sort of a spreadsheet where, when it gets to a specific point, I move my stop to lock in an amount. Then when it gets to another point, I'll then move it again. So again, it's quite a regimented amount. And then when I get to, say if I'm bidding a trade for a day, I'll then start to use the high or the low of the previous day's candle as my stop. So you're almost training it. So you're giving yourself room to move, if you know what I mean. You can end up giving a lot back, but if you've got to sort of, I guess, think how, what sort of trader are you as a person. And I'm quite open to, if I'm up $1,000, I might lock in 600, so I'm prepared to give 400 back, rather than going in like locking in 800, and then you get stopped out, because it will correct itself before it goes again. So then you take your 800, but then it moves another 1,000.
Do you try and stick to a ratio, like 1-to-3 or 1-to-2 or whatever it might be?
I'll normally look at that for potential profit, potential levels that it might then turn at. So if they're 3-to-1, say I see a trade that is not the potential to go to 3-to-1 because there's a resistance line in the way, or there's a pivot or something, I probably wouldn't take that trade. So I don't actually take profits, because I'm only doing one contract at the moment still. So I don't actually take the profits, but I just look at it as the potential for it to go past the 3-to-1. So then I'll be locking in underneath.
Yeah.
So that's the way as I say, I don't put targets in. I just trading stop, really. Yeah. Because sometimes you'll get those ones that will run, and you just lock in behind, and then each day, if you're doing it on a daily candle, you're just literally locking in underneath the close of that candle, and then you just let it run, really, and it can go to wherever it wants to go.
Yeah. Last question, Kev. We're now in November, middle of November, or even going into third week, just about 20. How do you see the rest of the year playing out, with the pandemic still bubbling away quite furiously?
I think it's just volatile. It's very volatile market at the moment. We've got Brexit coming up the end of this year for the UK. Yeah. Obviously, Trump's apparently be out in January, out of the White House. Personally, I let the chart do the talking, in a way. I don't. I keep an eye on it, and I'm always listening to, because I'm selling. I'm selling credit spreads. Really, I'll be in and out by the end of the week, so apart from the Apple stock, that if it gets to the point where I want to go long, I will. I'm not I'm not a buyer in this market because we've got too many unknowns. It's too erratic. And some people are saying this, and then they're saying, oh yeah, we're going to probably get the bullish. They call it the Santa Claus rally, where you get the rally going up to Christmas. But this isn't a usual year, and all of a sudden, the S&P, drops, 60, 70 points in an afternoon, and you're just like, well, how do you go in that? How do you put your head above the pit? You get shot off. So really, I'm more of a. I say I'll keep an eye on stuff, but I'm more for what do I want to do today? What is my strategy for today? And what is the chart telling me to do? And then all the other stuff obviously will iron itself out. And if there's, if they're talking or coming up to Brexit and stuff like that, I probably won't trade those times because you're putting yourself in unnecessary risk. So that's the sort of the way that I treat it, I guess, at the moment. I mean, I might change as I go, through the future. But really, I just want it to almost. You want everything to just iron itself out, so we get more of almost like a civilized market. If the S&P used to move 20 or 25 points a day, everyone's like, wow, this is a real big day. Now it's 50, 60, 100 points a day without even batting an eyelid. The other day it went up. It was, I think it's not this Monday, the Monday before. It opened at plus 165 points.
Yeah, they all went shooting up after the Biden victory.
That day after, yeah. So and they thought about a vaccine. It was up 165 points before it opened, and it closed at 45 points. So it lost like 120 points within that space, and I think 60 points of it were in the last 20 minutes of the trading session.
Yeah,
I mean, you're just mad. I don't. You're not mad. Obviously, you can make a lot. There'll be a lot of people making a lot of money, but I'm not. No way am I experienced enough or know enough about it to go in there.
Yeah. Thanks for talking to me.
No problem.
All the best with both property and trading businesses.
Yeah. Thanks. It's been good. Thank you. All right, cheers. Bye-bye.
I was talking just now to Kevin King. I'm Nicholas Penrake, and you've been listening to A Trader's Life.